Welcome back, traders and investors. We have Serge Berger on the line, head trader and investment strategist at the Steady Trader. We all need to be steady traders. That's a good quality. Serge, how you doing this morning?
I'm doing well, thank you. Thanks for having me on. It's seems like we're finally a little bit out of this sort of 1 week lull we've had in the markets, or 2 weeks, I should say. Finally, there's some fireworks this morning.
And the fireworks in the financial sector. Some good earnings coming from company you used to work with, J.P. Morgan and Goldman Sachs. Let's first take a look at the J.P. Morgan earnings. Do you have a position in this stock, or are you looking to initiate one?
Don't have a position yet. Typically, my strategy it tends to be just after this stock reports earnings. So I usually have my levels mapped out, before heading into earnings, and then if there's a sizable move, then I tend to do something sort of within like half a day of trading. Once the stock has sort of stabilized a little bit.
Okay, yeah, we were talking about this with Dennis in the pre-market show, hitting that $58 level after trading 55 a few days ago. So keeping an eye on that, folks. Pre-market high in J.P. Morgan has been over 58, 58.03. We'll see what happens there. Tough area to go long here, up a buck 80, running into resistance. So just getting to the overall market here. We had that big down opening last week, I believe on last Wednesday, and boy, had everyone scrambling for cover. But just like what the market's been doing over the last few years, we've rebounded, and now we're just close, very close to the all-time highs. Are you just looking for a continuation of the move here through 1978.50 and beyond, or are you getting a little cautious up here near the all-time highs?
I think we have to understand sort of where we are from a cyclical perspective, and I think I mentioned this last time I was on. I think unless we understand where we are both from a cyclical and a structural perspective, it's very difficult to have a view in the market. So from my point of view, we really are sort of in the late innings of a cyclical bull market. 5 years, it's been a hell of a run. And I think also finally from a sentiment perspective, we're probably getting a little bit frothy now. Can we get to above 2,000, sort of peak a little bit above there? That would classically be sort of the breakout, fake out move. I think it's entirely possible, but I think taking some chips off the table here, really shortening your duration, shrinking your position size, and even just raising cash levels, I think is probably a pretty good thing to do here, particularly as I head into August and September.
Are there any particular stocks where you're taking some chips off the table? Just either, they've hit their, your target price or gone up too fast, too quickly. Is there anything in particular that you've been taking some chips off the table on?
I have been trading with a sort of hit it to quit it mentality for pretty much most of the year, which is why I've been doing very well so far this year. Because it's been a market where you had to be quick, but not like day trading quick, but you had to be quick enough. The only thing, like right now this morning I was looking at, I think Alcoa has just had one hell of a run, and that thing just to me looks like it's pretty soon gonna have to roll over a little bit. It popped yesterday on good news. If you look at it through a multi-year lens, it's now run like I think 110% over the past 9 or 11 months or something like that. So historically speaking, he's getting very frothy, and I think the post-earnings rally over the past week or so is probably, to me, looks like it's something you don't want to chase right here.
Yeah, that's interesting you mentioned that because we were talking like it pops over like a major level, and that would be 14, 15, 16. And usually, first of all, it has to clear out the institutional sellers at that level. And then it has to give, the buyers and the day traders who yesterday, you had the higher open and it came back down into that level. So 16 has been a big hurdle. I think I'd have to agree with you there. So is it something you've had a position in that you're taking profits, or is it something that you perhaps would be looking to short?
I'm actually looking to short it. Quite frankly, I think at this point, I want to wait for a real bearish reversal. So yesterday, May, and I
Uh-huh.
stress May because we haven't had a price confirmation yet, but I say we had a big doji day, like you just said yesterday, with a higher open, ended up sort of closing somewhere near the open print. So if we get some sort of bearish reversal at some point in the coming few days, maybe week or two, I'd look to either sell that far out of the money call spreads or just short the stock itself.
Okay, all right. That's well, so we'll keep an eye and Alcoa. So with the
And
market
Joel,
up,
actually, let me quickly go back to J.P. Morgan because I think
sure.
there's a pretty important point. As it is my former alma mater as well. I've been looking at the stock for seemingly 100 years, and I can tell you historically it hasn't been a very good stock to trade. Right, and I think people forget that it's just kind of potters around between like 50 and 60 bucks for an eternity. But then again, it's a massive company. You're not going to make it. It's not going to be juicy like a Twitter or a Tesla to trade. So I think, like, I had this discussion with a whole bunch of people last week, and we're talking about these big names, and I'm like, guys, you're trying to generate alpha. This is not really the stock you need to like, date tick in and out of because it just isn't that juicy. It's a good stock, but it's not like it just isn't the best trading stock in the world.
Yeah, well, it's had a nice dividend, right? Or it has a
Right.
nice
Right, but
dividend.
that's the difference between trading and dividend investing,
Exactly,
right?
exactly, exactly. So if you're looking for a steady return, not necessarily a huge run on the principal, yeah, no, it is a stodgy stock, and I remember of trading it on earnings day, the actual day of earnings a few times, and
Mhm.
remember it being a little bit difficult. But anyways, are you keeping an eye on any of the momentum stocks? I guess we'll start with the Apple here, just making a run towards the all-time highs. Hasn't pulled off since the split. It all see it trading up modestly in the free market. Any outlook on Apple?
Yeah, I mean, I think with Apple, obviously the next catalyst here is going to be earnings, but and I'm not one to hold stuff through earnings, but I do think the stock here through sort of a multi-month lens looks okay, probably past the 100 mark. I just think $100 or formerly pre-split $700 is almost too obvious a level for it to stop. So if I were to have anything right now, and I don't, I would be more prone on buying the dips as opposed to, selling the rips at least for the time being.
Right, and that has been rewarding. Have you been keeping an eye on the crude and gold markets at all?
Well, not so much in terms of actually trading it, but I've been saying for probably 6 to 9 months now that I think gold is probably closer to being a buying opportunity and selling opportunity. Of course, coming to yesterday, you know, I'm not sure yesterday was really the thing, the move to be taken too serious. We need to give this a few days and see if there's any follow through selling. But I think in the bigger picture, gold is probably a better buy than a sell. And I say that also from in regards to the cyclical picture in the market, in the equity markets, as well as from an inflation point of view, and of course the dollar. So.
Okay, anything on the buy radar?
Tesla, I just full disclosure, just bought Tesla yesterday. It's been a boring stock pretty much for the past couple of weeks. Popped almost 4% yesterday after retracing right to the 100-day moving average and sort of finding pretty good support there. And I thought that yesterday's move was good. The thing with Tesla is if it doesn't follow through pretty quickly, it probably needs to be sort of rested again. And I'm saying this from sort of a swing trading perspective of like, a couple days to a couple weeks sort of time frames. But I think Tesla's looking pretty juicy here. It doesn't have earnings, next week or the week after, so it's pretty clear on that front. This thing, I think, moving back to sort of the 240s looks pretty good, but it needs to follow through over the next like few days or so. Otherwise, when it starts stalling, the stock just doesn't get very interesting.
When it stalls, it stalls. Hit a high.
Yeah, really.
You hit a high yesterday at 228.79. That is close to the high that you had at 229.78. So calling that whole 230 level. I see above 230. I see where you're looking here. Things really open up to 240. Were you able? I mean, it had that intraday move, kind of unusual. I know people were scrambling to find news on it, but
Yeah.
were you able to get in before that pop around 11 o'clock? Because boy, if you were in, you were in. And if you had a buy
Yeah.
stop or something, that's why sometimes if it may seem ridiculous, but if a stock's trading at like 216, 217 near the lows of the move, as opposed to trying to pick a bottom, you put a buy stop in there and
Right.
it gets you into position going the right way. How did you play it yesterday?
It really started ramping around 10:40, and I started frantically checking with the prime broker desks and everyone. And there was no one knew anything, And then all of a sudden we heard this thing out of China. So I guess it still takes a little while to get stuff across the ocean. But to me it's not a day trading position. So yes, I bought it. I bought it around midday, so pretty much at the highs of the day. But it's to me, this is a swing trading position in the sense that has at least a few days to a couple of weeks. Certainly want to be out of it, back out of it before earnings. So I'm not too concerned about having almost sort of high ticked at intraday.
Do you trade? You trade from what you're saying. It sounds like you trade the actual stock. You don't try and trade this with the options markets. You're in there with the actual stock.
Yeah, in this case, I bought the stock, and I tend to usually if I leg into a position, I tend to do it with stock, just because it gives me, sometimes you get the alert pretty quickly. Like in this case, this thing just started ramping, going vertical at 10:40 in the morning yesterday, ET, and there wasn't a lot of time to start thinking about flipping to the options tables and figuring out and I think that's actually a smart thing, because I remember one of my big mentors told me that, and just like, listen, there's no reason to just like scramble in and go crazy on the options. Eventually build an options position by all means, but that takes a little time. So then yesterday afternoon I took some time and flipped to the options and saw it made sense, and may do something in addition to that today. So I'll have to see how this thing acts this
And
morning.
who was that mentor you're referring to?
This was I'm not sure I'm supposed to say his name, but he was basically my the big managing director at JP Morgan that I worked with.
Okay,
He
all right.
he used to sort of throw out these funny, it's like when you sort of you know how it is. You start working for the investment bank, and all these big MDs seem sort of untouchable. He'd like, every time he step off the floor, he'd remind me to buy low and sell high, but sort of in a joking way. But it resonates with you, right? And then when he says things like that, it kind of
Kind of
you,
sticks
you
with you,
learn.
huh? Yep.
Yep, yep,
Yep.
yep.
Yep. Learn, but learn from people that have been in. It's probably J.P. Morgan himself, right?
This was JP Morgan himself, yeah.
Okay. All right. And just touching on, anything else just from today's trading, once again, we've had some good news out of the financials. We've ticked up against yesterday's high, which was 1874, or excuse me, 1974. And then we have the all-time high at 1978 and change. So you're looking at as a potential, resistance points to get out of your longs, or do both and perhaps reverse on some shorts.
I think, I mean, to be honest with you, I'm coming in today like 80% or 70, I think 70% cash, or literally just have a couple positions open. I'm really looking to just, kind of play the near term momentum. I really feel like we are probably near a cyclical top. And again, that can last another few weeks, and maybe we peak above 2000. But if anything, right now, I'm more interested in playing the Russell 2000 versus the S&P, just because the S&P is getting so close to sort of that that real resistance area, that above 2000 potentially. So the Russell
Okay.
probably gives me a little bit more clearly defined support and resistance areas at this point. Just from a swing trading perspective.
Thanks, Serge, for coming on. Serge Berger, head trader and investment strategist at the Steady Trader.